Welcome to the Money Insights Podcast, where high-income earners come to learn wealth-building strategies that will take them from high income to high net worth. With your hosts, financial and wealth-building experts, Christian Allen and Rod Zabriskie.
Welcome into today's episode of the Money Insights Podcast. I'm your host, Christian Allen. With me, as always, Rod the Pod Zabriskie. Rod, what's up, man?
Hey, I am doing great. And man, a new year upon us. Who knew? Who would believe it?
A new year and a new president, Rod. So here's my question for you. What does a Trump presidency mean for alternative investors? Now, you don't have to answer that right now, but that's the title of our pod.
Yes.
And that's what we're going to be talking about. So I want to preface this really quick by just saying that this podcast has nothing to do with political preferences. There might be a little bit of inferences here and there. Like that's just kind of natural when you're talking about this kind of stuff.
Sure.
But this has nothing to do with whether or not we like or dislike Donald Trump. By the way, I dislike Donald Trump, but it has nothing to do with that. It has everything to do with, and I should just say this, Rod, the reason I don't is because like values, our values don't align. Okay, but going back to our point, this is about what does it mean for actual investors, specifically alternative investors. And I want to kind of throw out my philosophy because this is just the way that I view Trump's world. I think it's going to be really great for alternative investors for a couple of reasons, but one reason more than any other. Well, we're going to get into several of the reasons, but the big, broad reason in my mind is that Donald Trump does what is best for him. He likes business. He likes real estate. He likes alternative investments. He likes people growing, as he especially likes himself growing. So like, he likes to pay
very little taxes.
He likes to pay, low taxes. That's the way that the Donald Trump presidency went. We're going to get into that in a minute. But I have to think for that reason, it's going to be good for alternative investors. We'll see, but that's kind of my take. What's your take kind of before we get into some of the more nuanced stuff?
Yeah, well, I think what you're saying makes sense. And we absolutely saw that the first go around. And that's why I think a lot of people are so excited about the second go around. And it will be interesting to see exactly what. Yeah. All right. Okay. Yeah. So specifically, alternative
investors. Yes, I'm with you. I know what you're meaning. Yeah. I was just giving you a hard time.
And it's still a mixed bag, right? Even the stuff that he did and is talking about doing, it's not like it all creates, roses and a great outcome on all aspects. And yet that's how economics works, right?
There's always
a decision has many different impacts. Sometimes in the short term, it's not as good as it's going to be in the long term, et cetera. So, and we'll talk about that. So.
Yeah, well, and vice versa, right? So not only that, but obviously in a political landscape, you're going to have half the people in the country thereabouts that just don't like where we're headed on that front. So there's just always going to be conflict there. But again, regardless of that, we're looking at it through the lens of how can I take advantage of the opportunities that are in front of me because I have this president coming in who we know is so pro jobs, pro low taxes, pro business. Those kinds of things are going to make it. They're just going to make a difference. Okay. So what I want to do, Rod, is I want to start with what we learned from Trump's first presidency. So start off, Rod, just kind of give us a little bit of what we saw from Trump from a tax reform perspective specifically.
Yeah, well, and that's the Tax Cuts and Jobs Act. Which again was great for
You've described this before, Rod, but make sure people know at least the core elements of the Tax Cuts and Jobs Act.
And maybe even the kind of the ideas behind it. The ideas behind it is let's reduce taxes where we are creating jobs, where we are building homes and commercial real estate and these other things, because that drives not the opponents would say, well, that only makes the rich richer. And I think it does that. But the idea behind it is that it raises all boats, right? If there are more jobs, well, the jobs are filled by somebody, right? It's not just the CEO that benefited by that. There are a lot of other people who benefit from that. So the corporate tax rate was what was lowered. Bonus depreciation became a huge thing. And the where we stand right now is that those things have been phasing out, and they're going to have to be brought back. A lot of those the elements of that act are going to have to be brought back, or else they'll just kind of phase out and go away. But I think what happened in the first term tells us kind of, the kinds of things, the kinds of priorities that we can expect.
Yeah, I think there's a lot of lessons we can learn. Again, just because at the very philosophy, like Trump's very philosophy is in all the things that we talked about. And can I just tell you, while I don't agree with him, like in terms of our values, I absolutely agree that cutting taxes, putting the opportunities in the hands of the entrepreneurs and the investors, to me, makes so much more sense than taking it and putting more on the government. So like there's always some give and take here, but I'm 100% agreement in that. And then like I look at it for myself from like a financial perspective, and I'm honestly pretty optimistic that we're going to have a lot of opportunities to do, unique things. I'm just thinking about something as simple as bonus depreciation, which can have such a huge impact. If I'm someone who is accumulating real estate on a consistent basis, that just ends up being such a massive, massive benefit for me. So those are the types of things that I love, and that, of course, in my mind, are stimulating the economy, creating more jobs, and doing all those things. So in that way, like we definitely agree from philosophically on that. So okay, so there's that's obviously the big thing from a tax perspective, right? It's going to have a huge impact. Just because there will be more strategies available to defer taxes or eliminate taxes or save taxes. Okay, Rod, so we've talked a little bit about like the tax part of it, tax reform, but there's other elements that I think will have an impact, significant impact on, and by the way, like we haven't even talked about like estate taxes and things like that, but I think it's fair to say that just about any tax situation, Trump is going to be pro reduce taxes, right? So like if I'm somebody that is looking for tax reduction strategies, this is probably pretty good news for me. But there's more, Rod. Talk a little bit about this one, because this is huge. It's deregulation, because regulation, of course, oftentimes stands in the way of us doing stuff. But what does that side of things look like? Kind of what did we learn from his first stint?
I think a lot of it goes back to the environmental side of things. And we clearly know he is on the opposite end of the spectrum from what we would call environmentalists, environmentally friendly kind of things, which the biggest impact on that is energy, right? So huge swing in when Biden became president and shut down pipelines, shut down drilling and exploration and things like that. And I shouldn't say shut down. There is still exploration. There's still drilling happening, just at a much smaller scale. And well, we can expect that to come back. And so higher supply may or may not. Hopefully for the consumer, we're going to look at lower prices at the pump and other anything that's impacted by oil. But as an investor, I think it opens up a lot of opportunities for anybody who is interested in investing in oil and gas or anything energy related, because there will just be a lot more happening.
So this kind of goes back to my first line philosophy. It's kind of, is there anybody that dislikes regulation more than Donald Trump?
I think it'd be rough. Maybe Elon Musk.
Musk.
But I don't know that. I don't know that either of them is ahead of the other, because I just feel like they both disdain any regulation.
Yeah, they absolutely do. And so again, like there's pros and cons to that, right? But the pro is that just because of that, there's likely to be more opportunities that we can take advantage of if we're looking for those things. And in my mind, it's about creation. It's about business creation and wealth creation. So when I see deregulation, like there's an element of, hey, like, maybe we'll just have less scrutiny in what's required of us when we're doing certain business activities or doing certain investment strategies. But I think it is broader than that. Do you know what I mean? I think it encompasses more than just that element. Okay, so we've talked a little bit about tax reform.
Can I just throw some really quickly in there? The challenge on this one is there's a lot of regulation that exists on all levels. So we're talking specifically federal, which makes a big difference, again, especially in stuff like energy and access to land and things like that. But it won't necessarily change state regulation, county, city regulation, which is ultimately where a lot of as a business owners, that's where we run into it, right? And so as investors, I think that's where you'll see it is more on the kind of the federal side.
Yeah. I think that's absolutely true. Okay, so a couple of thoughts here. Let's talk economic trends. We've talked tax reform. We've talked deregulation. Some of the economic trends that we saw in the first stint. Rod, what do you think? I'm just asking you to speculate here, but you're putting back on your economist hat and talk to me about interest rates and inflation. Like, obviously during Trump's previous stint, interest rates were very low. Like, what do we think happens from an interest rate standpoint? And then, of course, what impact does that have on alternative investors?
Yeah, that's an interesting one, because if you look at where prime rate was from 2008 to basically 2016, and it was just bottom of the barrel, right?
Yep.
And then it started rising. So between 2017 and 2020, it rose, but it wasn't a dramatic rise. It was a slow creep, and so most people just didn't even notice it. And I think that's healthy. I think we needed to see higher rates than where we were at. There had to be some. You can't just stay at the bottom forever.
Yeah,
and then of course
not sustainable.
Yeah, and then of course COVID happened and rates dropped again. So by the time he left his presidency, we were back to the lowest rates. And then of course we saw the rise. Now, what's interesting about it? So most people blame the Biden administration for inflation.
Mm-hmm.
And yet, if you think about it,
all of that is ridiculous. There's
that's it.
No one. It all works together. So I get that the political scene is they're crappy. They did this. But the reality is like we're all responsible for it. You know what I mean?
Yeah. But when you talk about all the COVID, helicopter money, that came to everybody, well, that started with Trump, right?
Yep.
He did the first round. Biden came in later and added more. And so, but anyway, back to your question though, okay, moving forward, what should we expect? Well, some of the things that he's talking about doing could add to inflation, right?
Yep.
We'll get into tariffs. We'll get into some of these things that he's talking about, but depending on how large a scale he goes with it, it could easily drive inflation, which in that case would cause this kind of movement where interest rates are going down. It would stall that for sure, if not potentially, causing them to go up again, right?
Okay, well, let's get into it, Rod. Let's talk about what are some of the things that we can expect as we see Trump coming back into his presidency. And let's just start from the top. You kind of alluded to this tariffs idea. Most people at least have a baseline idea of what we're talking about here, but just kind of give us some context and then what you think that means for the presidency, realizing that we're speculating to some degree here.
Sure.
We're speculating, but we're doing it based on a couple of things that we know. We know who Trump is. We know his philosophies. We know what he did in the past. And so those are pretty big indicators of what we can expect. Go ahead.
Yeah. So a tariff, just to explain what that is basically anytime a product is imported that has a tariff attached to it, you have to pay extra money to get it into the country. And you say,
just like a tax.
Yeah. So you say, well, who pays that? Is it the people who are sending it? Is it people who have ordered it and are receiving it? And at the end of the day, it really doesn't matter because all that's going to be passed on to the consumer, right? If the product is going to end up where it's supposed to go, which is in our homes, in our businesses, then ultimately the consumer pays more for that product than they were paying. And the fact is, I mean, if you think about how just so much of the manufacturing has been happening in China, and the benefit of having it manufactured in China is because it's such low cost, right? So we're now used to, over the last 20 plus years, we've become very accustomed to paying very low prices for the things that we use every day because of that. And so if you increase the price of it coming into the country, then, well, you're going to pay more as a consumer, and that's inflation, right? The prices went up, not just temporarily, but for as long as those tariffs are in place. And I'll tell you what, I looked into this a little bit, and it tends, like, tariffs that get placed tend to stick around. Like, we have tariffs now that they started 40, 50 years ago for what was seemingly a short-term purpose, but they're still there, right?
That is interesting.
So now I'll say this. I don't think that when you look at the whole of what he talks about with tariffs, like, for example, products coming in from Mexico, products coming in from Canada, I think he's primarily using that as leverage to negotiate and get certain things that he wants. So will those actually come through? Probably not. That's my guess, because he's not even president yet, and he already has this having conversation with leaders in those countries, right? But I think for China, I don't think there's any question. If what he said actually goes through, there will be tariffs for stuff coming in from China.
Okay, so talk about the why behind it, right? So again, I mean, in my mind, but tell the listeners what Trump's trying to do in that. Like, what's the purpose behind this whole tariff thing? Are there better ways to, get the country in a better position? I mean, obviously, there's probably a whole bunch of ways that are possible, but we're focusing on this specifically. So just give us an idea of the why behind it.
Yeah, I think the biggest thing is, and this has been consistent again from before he was elected the first time, he's talked about bringing more jobs back to the U.S., manufacturing especially. And so if you say, well, we exported a lot of that to China for a long time, and we're trying to bring that back, well, how do you force the issue there? If we got so used to paying low prices on the products produced in China, well, let's raise those prices. Let's force that to happen, which it does a couple of things. I think in his mind, it does help on the international spectrum to, I don't know, make the U.S. more respected than I think he feels like we are and have been. But really, as far as domestically, it's bringing those jobs back.
Yeah, interesting. Okay, the tariff one is just really funny to me, just because it's so divisive, right? Yeah. Some people think it's like the next way to bankrupt the country, and that there's no basis around it, that we need to just focus on traditional things like increasing taxes. But what it's really doing, at least this is my view on it, I'm not somebody that lives in the political scene, but from my view, all it's doing is replacing taxes with an increased cost. And what I mean by, and again, not even just to China in this example, they want to make it more expensive. But like you said, it goes back to the consumer. And so he's forcing then businesses to say, we're not going to then push these jobs over there. We're going to bring it here, which is good and bad. But for the business owner, it does make it more difficult to succeed as a business owner with higher cost, right?
Yep.
So there is an interesting dynamic. And of course, it's ironic that he's saying it because he's been using, that kind of manufacturing from other places his entire working career. But again, I also see the value of saying, hey, can we strengthen what we're doing here on the local scene? Can we get more of these things happening here locally? It's just I see both. As a business owner, I see the side where I want to keep costs low. And if I do, then I can create more profits. I can create more jobs. I can build a business. Yeah. On the other hand, if I push all of the jobs, instead of building the jobs here, I push them all over there. Like that's what he's trying to kind of figure out. And I think it will have, if it ever gets to that point, like it'll have a lot of probably mixed results, just depending on the person and the situation. You know what I mean?
Yep.
Sure. Okay. So let's talk. Okay. So we talked a little bit about the tariffs, Rod. talk about back to the Tax Cuts and Jobs Act.
Mhm.
So again, we know where we were at, and maybe this is easy to just kind of review, but talk a little bit about what those potential tax changes could be based on what we've learned in the past.
Yeah, well, I think when you couple that with the fact that there's a shortage of housing in the US, and there has been for a long time, and we kind of got caught up a little bit as it relates to like the late teens and even like post-COVID. But obviously the last 2 years, it's been really rough to try to expand anything as it relates to housing. So if we can stabilize interest rates, which obviously you could call them stabilized, so to speak, in terms of like, well, the last year or whatever, we haven't seen increases. And then just recently we've seen the decreases. So that's positive. But then also with things like the bonus depreciation, with other tax benefits for capital gains, for investing in real estate, then that should give us an opportunity for real estate investors to really go out and make some cool things happen.
Okay, Rod, I skipped something that I want to go back and talk about.
Okay.
We talked a little, like we're talking about the impact on business owners and interest. So we talked about interest rates for a minute, but I forgot to hit on the element that goes directly to our investors, right? So this is a tricky one because on one side we're saying, okay, these tariffs very well could like jack interest rates up, right? It could have an impact on inflation. And yet everything we've seen from Trump in the past has been trying to keep interest rates low so that business owners, investors can borrow money at a cheap rate and go and create. So anyway, as I was thinking about that, like, what do you think? I mean, and maybe this is just an impossible question to answer, but in my mind, I'm kind of on the side that would say like, until he does something different than what we've seen from him in the past, and like until the philosophy is different, it's hard for me to believe that like the tariff thing's actually going to happen.
Mm-hmm.
But what's your take?
Yeah, or certainly at the scale that he's talked about it, right? Which again, that's where that kind of
he embellishes everything,
leverage,
right?
That's true too. Yes, everything's the biggest. Everything's
Nobody's ever seen anything like it. They told me they've never seen anything like it.
That's right.
It's the best plan they've ever seen.
Classic.
We don't know who they are, but they've never seen anything like it.
Yeah. Well, and I'll also take this moment because if I ever put the economist hat on, I have to be honest, right? Yeah. So in the beginning of the year, we did kind of an economic predictions. Right?
Did you? Yeah. Well, are we holding you to the fire on your prediction?
I said interest rates would come down. I said there would be some event, like they would hold like kind of where they were, and then some event would drop them. They did come down eventually because inflation came down. There wasn't any kind of catastrophic event, which I'm glad for. I'd rather it happen.
I don't want you to be right on that prediction, Rod.
Something like that.
I don't even remember you predicting that, but I would have been like, Rod, are you jinxing us here, man? Like, no, why are you predicting bad things?
You loved it because lower interest rates were good because for your
you're right. Your house. You're right. So I don't want the event, but I do want the lower interest rates because I'm currently on a construction loan, and I would love for interest rates to be much lower once I get onto long-term financing. So you're absolutely right. I am 100% on board with lower interest rates. Okay, good stuff. So, go ahead. Getting back,
I didn't quite answer your question because I got a little sidetracked on going back there. Trying to be the honest economist. But
that's what we're going to call you. We have a new nickname. Rod's going to be the honest economist.
I don't know if that exists. That's the irony. I don't know.
Okay, so here's the thing. I think it can exist. It's really tricky though, because economists spend all of their time speculating.
Yes.
So but that doesn't mean it couldn't be an honest speculation. It might just be wrong, but
I just degraded all economists out there. It's not that you can't. It's like if you're honest, then you're just saying, hey, we're trying to draw lines between what we see and what's happening.
Yeah.
And anyway, so that's I guess.
Okay.
Honest
Okay. But I like the honest
willing to do that.
economist. I think that might stick. I'm going to start a website. Okay.
Oh, okay.
Keep going.
But so I think, I don't think that the interest rates are going to go up. I think the latest I've seen is they'll probably do another 0.25% drop. And we're recording this on December 12th. So by the time it really is released, then we'll know whether that happened or not, because I think they're meeting again on the 18th. And the expectation is drop it a 0.25 point, but then they hold steady for a few months. And that doesn't surprise me. That wouldn't surprise me if that happened. But I think by the end of next year, we will still see it lower than where we end 2024.
Okay, Rod, we've already talked about deregulation. I'll just say this. It's likely that deregulation will be doubled down on. That doesn't make sense. I mean, you get the point, though. I'm almost certain that Trump will double down on deregulation. Again, if it's good for him, he's going to feel like it's good for the country.
Which it will be.
But which it ends up being really great for me, too, because I like when they give us a chance to grow and build and produce and create. So I'm all for deregulation. Okay, what does it mean we talked about interest rates. What about trade policy, Rod? What does it mean from a trade standpoint?
Yeah, so
I mean, we've talked about
the tariffs. Yeah, going off of the tariffs. The thing that could potentially happen is if the tariffs go big, like as big as he's talked about, which again, I've already said I don't think it would, but if it did, it doesn't just impact our relationship with China, because we import from a whole bunch of other places as well across the world. And so there has been a lot of just kind of bad vibes coming from Europe, from South America, from other areas in Asia, that the tariffs just basically create an economic storm across the country, and that obviously is bad for trade, right? Now, can these different countries turn completely away from the U.S. and still, grow the way they want to? Maybe not, but at the very least, it strains those trade relationships, which again, I think it becomes a negotiating chip and is designed to be a negotiating chip to get a little more internationally of what is good for you at the U.S., even if it means kind of threatening, which Trump would never threaten anyone, right?
Never. No threats. He's really great at taking threats, and he never throws them out.
Right.
Okay, so maybe I'm just going to do a quick recap, Rod, and then we're going to get to some kind of overall closing thoughts from you. But I think the idea here, like the moral of the story that we want to get to, is what should investors be thinking? What should they be doing? Here's a couple of thoughts. Again, just to kind of my closing thoughts here. One, tax is going to go lower. So that gives us an opportunity to take advantage of one of the biggest factors that contributes to whether we can build and create wealth. I always say this, regardless of whether you're an investor or whether you're a W-2 earner, like that focus, you know what I mean? Most of your income's coming that way. Regardless, so much of our income is going to be given to taxes. And so even if I could cut off a sliver of that, I just should be, right? I should be proactive at looking for opportunities to do that. And the impact that it can have on our total wealth and ability to grow will just have a massive impact. So look for tax opportunities. And obviously, if you're listening here, we'll be looking for those as well. I talked about deregulation. I love that. I think I'm excited about interest rates potentially going lower. It's great for business owners. I'm super excited about the fiscal opportunities that exist with the Trump presidency, and not nearly as excited about the social ones. But here's the deal. We should be taking advantage of the opportunities that are ahead of us. So my message is that regardless of whether you love Trump and you're super excited for what's to come, or whether you despise Trump and you can't stand the dude, well, regardless of whether that's the case, just take advantage of the opportunities that are in front of us, right? And that's really kind of what my message is. I genuinely believe that it will be a really positive, growth-oriented next 4 years. And so from that standpoint, I think investors should be really excited. What are your thoughts, Rod?
Yeah, well, this isn't going to be groundbreaking, but I think Trump specifically, and then a lot of the other kind of people that are in that realm with him have been very clear about what they're going to do, which communicates to us where we should be focusing, right? And so, going back to the tariffs again specifically, we were talking like a little more internationally, like how that works. But if you follow specifically, okay, what is going to have those tariffs attached to it? In other words, what jobs are we trying to create here specifically? Like they're going to target certain industries. And so you can, if you're paying attention to what's happening on that, then you can actually target industries in terms of where you invest or where you avoid investing in some cases. But the point is that they're being very clear about what they're doing. And so if you just, pay attention to that and look at more of the details, not just the headlines, but okay, more specifically, what are they doing? And as they start to implement those things, that'll tell you where would be good to invest.
Okay. Make sure you're doing tax planning, you're monitoring trends, diversifying across assets. That's a great way to keep yourself safe from deregulation risk, and leverage. Utilize leverage, especially if we have low interest rates. These are all really positive for us, giving us a chance to grow and build and produce. And man, that just gets me fired up. Okay, Rod, any final thoughts, or did you already get them?
Yeah, I think I'm good.
Okay, thanks everybody for hanging out with us today, and we will see you next week.
Thank you for listening to the Money Insights podcast. To learn more about the financial and business strategies discussed in this show, please visit moneyinsights.net. The views and opinions expressed on the Money Insights podcast are not intended to be individual financial, tax, or legal advice. Always consult with the appropriate advisor before making financial decisions. And if you're enjoying the show, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. This will help others find the show and learn wealth-building strategies for themselves. Thanks again for tuning in, and we'll catch you in the next episode.